headlines are you looking for in 2025 when it comes to crypto assets, and especially that Donald Trump is entering the White House on the 20th of January, and we are expecting, and the major crypto investors are expecting a lot of changes in the regulatory framework?
Yeah, I'm looking, thanks for having me on the show, by the way. I'm looking primarily at what the short-term price drivers are and what the long-term ones are. And the long-term fundamentals remain intact. Institutional adoption, greater usage, cannibalizing gold, I think is really supportive. But in the short term, I am a little bit cautious right now. I think particularly what we've seen over the last week with the correction in prices, I think a lot of it is macro data reasserting itself on Bitcoin prices. The kind of Trump honeymoon is over, I think, a little bit. And we've had the Fed minutes, a little bit hawkish. We had some macro data again implied that the Fed were less likely to cut rates. And that's really impacted Bitcoin. And this week, we've got CPI, PPI, and retail sales, and they look like they all might beat. So I don't think that's going to be particularly supportive for Bitcoin in the short term. But then we've got the Trump inauguration. And I think at that point, that could be quite positive. We might well see Trump enact a executive order to allow the Bitcoin Act to allow the government to purchase Bitcoin.
On this point, James, I mean, if Donald Trump decides to make this executive order and allow the government to buy Bitcoin and a strategic reserve, we've seen there's been numerous initiatives on this, both from the States and obviously within people close to Donald Trump. What do you think the practical impact could be? And do you believe that we will see other nations and other countries copy the U.S. model, and it creates kind of a state FOMO from that perspective?
Yeah, there is this kind of nation-state FOMO going on. It's something we wrote on our blog earlier this week. And I think since the US even discussed it, I think just wind back a year, the fact that the US government, one of the largest governments in the world, is talking about Bitcoin as a reserve asset is in massive progress for the asset class. And we are starting to see, whilst we've not seen any really affirmative action by any large governments yet, we are starting to see countries like Japan, Europe, not the UK yet, it's quite backward in that respect, but quite a few big countries discussing Bitcoin as a strategic reserve asset. And that's a massive step forwards, I think. And it will probably mean the US needs to do it first, but that lends so much credibility for the asset class. And I think that will also have a knock-on effect to institutional investors who are still quite cautious about investing in Bitcoin.
Do you expect over the coming months and years Bitcoin to react differently than other L1s, and even let's put it the NFT and the meme coin bucket and the third one? Do you expect these different assets to react differently to macro news?
That is something that we're starting to see. Wind back a couple of years ago, whatever Bitcoin did, the rest of crypto did. There was no real differentiation. But I think something like the difference in performance between Ethereum and Bitcoin last year really exemplified investors are starting to really differentiate between each asset, and really see there are different fundamentals driving it. Bitcoin is this store of value competing with other store of value. So, and recent treasury rises make treasuries a little more attractive, and that's affected Bitcoin negatively. Whereas I think something like Ethereum is more like a tech stock and suffers more based on those. And you can see that in the fund flows and the price performance this year. So looking forward to, as the market matures and analysts start to understand these different cryptocurrencies and that they are different, we'll see greater price divergence. And certainly L1s, they're much more sort of tech-like and therefore more like to trade like growth stocks in the equities, particularly tech growth stocks. And something like Bitcoin or other stores of value like to perform in line with gold.
This is really interesting what you're mentioning, James, but I remember there are quite some times in 2024 where there was a very high correlation between what's happening to Bitcoin and what is happening in NASDAQ and for the tech sector overall. And we're starting the year with some kind of negative sentiment overall in the tech sector because of the rising yields, US yields. So to what extent would you worry that with the continuing rise of US yields impacting tech sector that we're going to start to see some impact on Bitcoin and Ethereum as well?
The point you make highlights that gold is that Bitcoin is a complicated asset. It has its store of value features. it's a bit like gold, but with a growth component in that it is connected and linked to tech. And therefore, it is influenced at times to the NASDAQ. I mean, at the moment, it has roughly a 40% correlation to the NASDAQ. At times, it's negative. And it's quite often linked to monetary policy pivot points. So earlier last year, we saw actually a slightly negative correlation. And then as it became clear that the Fed was going to cut rates in September, we saw an increasing correlation to the NASDAQ. But it definitely waxes and wanes depending on what's going on. Let's say if we see a real sort of geopolitical risk event, people are like to sell equities at that point and buy something like Bitcoin because it is this kind of stateless asset. So I think the story is not an easy one to articulate and very much depends on what's going on geopolitically and economically.
That's what makes crypto markets so exciting from that perspective. That was James Butterfill, the head of research at Coinshares. James, great. Thank you for being on Crypto Weekly with us today.
Thank you, James.
Are your children prepared for the future of money? Order Decoding Crypto with Henri and Hodler, the #1 new release kids book on Amazon.